Hi, welcome to another edition of Weekly Market Analysis by tradersclub.co.uk. This is for 16th of December, coming close to Christmas, looking forward to the Santa rally, so we'll try and keep this short and sweet. Let's start with a disclaimer. Anything that we discuss here, it's available in a public domain and therefore it should not be considered to be advice for your trading or your investment. We are simply sharing the information for the benefit of the club members. Let's start our video analysis by looking at S&P 500 daily chart. The actual price action moved fairly rapidly from November lows and it kind of retested this falling resistance trend line, created lower high currently. The concerning bit is the creation of this evening star reversal pattern, which could potentially indicate a further softening of the price or controlled pullback of some sort. Stochastics is at the overbought level, and with the 2 days of pullbacks, Thursday and Friday, this can potentially carry on into Monday, although the small rebound is quite possible as well. We can check it in intraday charts as well. But just looking at this chart, we're reaching the middle Bollinger Band at 1407 level. We are currently supported by 50 period moving average at 1432.58. And I believe market actually rebounded slightly after the close on Friday, so futures still stayed open for a while. And obviously an additional support would be at this 200 period moving average 1487, but around 1400 looks quite strong support anyway. Alternatively, resistance on the upside, it's clearly located here at 1425 level, which was a cluster of previous lows and a neckline of this triple top, followed by 1434 level and then obviously 1438. So is this going to be a continuation of the downtrend, or is this a chance for us to break higher, have a Santa rally? Good news relating fiscal cliff, we'll have to wait and see. Intraday charts for S&P 500, this looks like a rising wedge formation, which is ultimately bearish setup, and then obviously we had a third touch of this falling trend line connecting lower highs, and market sold off. If we look at the fib retracement from the recent low in November to the recent high, 38.2 fib retracement would point us to this 1400 level, 1401.58. We are currently supported by the cluster of 50 and 200 period moving average on intraday time frame, which is 2 hour in this case. So the significant support on the downside would be around 1409.15, followed by 1401.58. Only the loss of that would potentially target 1390 and lower. Alternatively, if these levels hold and we spike higher, then obviously 1423.73 would be an obvious kind of resistance level on the upside, followed by 1434 and 1438. As we already mentioned, stochastics is in oversold levels, so intraday levels like 4 hourly, 1 hourly time frame, 15-minute time frame are on oversold, so possible little bounce back. FTSE 100 looks much more bullish than S&P, DAX obviously as well. But we had two bullish flags formations. This was the first one and this here was the second one. And then if we take the number of points from this low to the high and add it to the breakout, would potentially target 6,000, which is a nice psychological level here as well. And the same thing, the number of points from this bullish flag to here added on a breakout would target 6,000 as well. We reached 5965, I believe, as a high, but this actually morphed into a rising wedge, and then obviously we had a triple top here as well. So breakout, now we are retesting this previous resistance, which was clearly taken out, and now that's newly formed support. although the candles are becoming much narrower, which means that obviously the uptrend is weakening, but it's still the uptrend, so we should respect it. Our stochastics is currently at the overbought level. MACD is moving quite higher, and RSI is actually curling up as well, so just something for us to watch. Support on the downside, it's located at 5853. Followed by 5827 and then 5815, which would be quite a significant deep retracement. Alternatively, if these levels hold of 5921, which was the previous resistance, now newly formed support, we could very easily target 5948 again, followed by the move higher, potentially targeting 6000, which is a nice psychological round number. Volatility index, it's pointing to the same picture. This is more relevant to S&P, but it applies to all of the markets. We have protracted consolidation range, which is morphing into this big, huge triangle, although we are creating higher lows, which is quite concerning. And obviously the recent spike in price above 20 and 50 period moving averages, and especially from the oversold levels, is pointing to the pullback in S&P, and it's giving it kind of credibility and confirmation. So what I'm looking for at the moment is a breakout above 1747 level as a resistance, followed by 18 and then obviously 1864.19. If that happens and we have a daily close above these levels here, it would be quite bearish for the indices, in particular S&P. Alternatively, if the price spikes higher or confirms the resistance at these levels, which is 200 period moving average, it's quite significant, around 1747, and we move lower, we could very easily see a rally in stocks and indices in particular into the year end. Copper price, yet again, protracted consolidation again, creation of higher lows. Last time we were talking about copper, we were kind of sitting around these levels here. Price moved higher much quicker than anticipated, and it's currently trading above the cluster of 20, 50, and 200 period moving average on daily time frame, which is quite bullish. However, we received a confirmation of this resistance with the first touch or second touch of the falling trend line, and what I'm looking for at the moment is obviously stochastics is in overbought. Support on the downside, it's located at 361, 358, kind of around here level, which is this cluster of these moving averages, before we move any lower, potentially targeting 340, 345. 7 thereabout. Alternatively, if the price breaks higher above this level and closes above 372 and creates a daily candle above this level, it can very easily target 3.822 and 383, calling potentially for even a 4, but that would mean that stock markets are rallying, indices are rallying, S&P is rallying as well. So just to keep an eye on that as well. Gold chart. Last time we kind of did a video analysis, this was actually happening, and this appeared to be inverse head and shoulders with the breakout above the neckline here. Unfortunately, that was faded, and traders were selling into the strength. And that created this consolidation triangle symmetrical pattern. Although this is still very, very bullish, we have stochastics creating higher lows together with MACD and RSI confirming higher lows in the price action as well. However, price action is actually trading below 20 and 50 period moving averages, which are kind of curling and moving downwards as well. So the current support must hold, otherwise we will very quickly potentially see 1684 followed by 1672, and in particular 1663 or 1660, which is 200 period moving average. This is significant support here, and it would probably be seen as a buying opportunity by many traders. Alternatively, if we stay in this trading range, a nasty trading range where appetite is kind of fading for a higher prices and people are buying it at these kind of support levels, could mean that we see another spike higher, potentially targeting 1718, 1725, and then potentially 1740. But we would need to keep an eye on this as well. WTI or CL contract, American traded oil, looks very bearish. Price action is trading below moving averages 20, 50 and 200. We had a rising wedge, which is in itself fairly bearish development, and then subsequently two bear flags or triangles, which both resulted in additional selling as well. This looks quite bearish. Unfortunately, these levels have to stay intact in order for us to stand a chance to kind of consolidate further in a sideways fashion. Resistance on the upside is clearly located at 87.23, 87.50, which is 50 and 20 period moving averages, before we potentially target 89, 22 and 90, 33 levels. If this support holds and we see further selling, concerning bit for me would be the loss of 84.05. The loss of this level would be very, very significant, and it would be seen as a very bearish development by majority of the traders, potentially calling the price to retest lower levels of 83, 81 and 77 fairly quickly. Stochastics is currently at the oversold level and curling up, so we should keep an eye on this as well. US dollar index lost the support of psychologically important 80 level, and this actually is morphing into a downward sideways channeling trading range. The price actually closed below this rising support trend line, so obviously 80 level is lost. And the confusing bit for majority of the traders, especially the guys who are trading gold as well, is that we have softening price in dollar index, which is monitoring the movement of US dollar against the basket of 5 currencies, and then we have a downward move in gold and oil as well. So more QE3 obviously would cause for a softer dollar to come against the basket of other currencies, but it would potentially call for a higher commodity prices, and that's not actually reflected at the moment. So I was looking at a euro levels as well. Euro finally broke above 1.3 again and closed 1.315 on Friday, which is quite bullish for euro. And potentially, if that move continues and we see a further selling in dollar index, potentially targeting 78 and 93 and 78.60 levels, would call for a euro dollar to spike higher, potentially targeting 132, 133, 134 levels as well. So obviously, just for us to keep an eye on that as well. Hopefully this was very informative. I thought this would be much quicker, but I'll try and do another report before Christmas and year end. Stay safe, manage your risks and your tight stops, and I'll speak to you soon. Bye.